Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Up in just a few minutes in our innovation and tech segment brought to us by Caldwell Soames and OGPay.com, we are joined by our regular contributor, Paul Caldwell, and today he is joined by influencer Anthony Lolli. He's a landlord, an entrepreneur, and co-author of The Heart of the Deal. Today, we're chatting housing market trends, what's happening with mortgage rates, especially here in the Tri-State New York City metro area, and if renting or buying is the best thing to do right now. Home prices are most likely to hold over the 12 months. The Fed's rate hikes have made borrowing money more expensive, and rates are only expected to get higher over the next year. So if you must purchase the home soon, rates are likely to be lower now than they will be in the coming months. That's the bottom line. Should you be buying now or holding off? Well, over the past 2 years, the housing market has experienced extreme demand and limited supply, which has led to massive price hikes over a short period. At the same time, inflation has ballooned across the world. And to get inflation under control, the Federal Reserve started raising rates in March of this year, making borrowing even more expensive on top of already high base prices. And in 2020, the average list price on an American home was approximately $375,000, with average interest rates on 30-year mortgages at about 3%. But today, guys, the average interest rate is 7%, with average home prices upwards of $525,000. That's some perspective. Now, during the pandemic, many white-collar workers decided to relocate with the newfound freedom of remote work. Many moved to less expensive locales. This also increased demand and drove up prices via these crazy bidding wars that we're seeing play out right now. And now prices remain as high as they are because there is a shortage of inventory. It's madness all around. And here to chat some more is Paul Caldwell and Anthony Lolli. Welcome to the show, gentlemen.
Thank you. Thank you for having
us. Nice to be here, Zen.
All right, Anthony, I'm going to start with you. Welcome back, Paul. So, Anthony, many Americans right now have been priced out of the market as home prices have skyrocketed over the past 2 years. And that means that there's more demand in the rental market than usual. So that's where developers have been focusing their energy. What does the rental market look like in the tri-state area? And what is the average price, Anthony, of a 1 and 2 bedroom apartment?
Well, it's insane. I mean, if you have an apartment that's on the market right now, there's almost as if there's a concert because there's a line around the corner for people who want to see it. People are applying for apartments sight unseen. It's madness out there. And the qualifications, the bar has risen. So, typically you're supposed to make 40 times the rent. But now, you need to at least be making $150,000 in order to qualify for something. So studios are starting at $2,500, in some places $3,500. And when we're talking about 2 bedrooms and 3 bedrooms, now we're talking $4,000, $5,000, and $6,000.
Wow. That's insanity. I know the in New York, annual income needs the annual income that you need to afford a 1 bedroom rental is roughly about $61,000, and the median household income for renters is about $49,000. Where somewhere like in Texas, annual income needed to afford a 1 bedroom rental is about $37,000, and the median household income in Texas over there for renters is about $43,000. So you see a big difference. Now, in some states, 25% of the people are lucky enough to find available rental property. But to your point, Anthony, there's a line across the door. And nationally, 15% of American households, that's around 6 million people, are behind on rent this fall, according to a new report from commercial real estate website myelisting.com. Paul, starting March of 2022, when the Federal Reserve started raising interest rates, that made borrowing, including borrowing via mortgage, more expensive. Okay, so the Fed is currently hinting that rates could rise as high as 4.6% in 2023, and estimates puts the average rate on a 30-year mortgage at about 7%, and it's reasonable to expect rates to shoot up even higher. Increased borrowing rates don't just discourage buyers, they discourage sellers from even listing their properties in the first place, further compounding the supply side shortage. What do you say to this, and what is the mitigation?
Well, then I think in your opening, you quoted some numbers quite accurately. The average cost of a home was $350,000 or so, $350,000 or so, and now it's $550,000, let's say. But the real contrast is the interest rate, because in the first instance, 3% interest at $350,000 average cost per single family home, then 7%, right? Well, the difference in that over a 30-year term, if you do the numbers, the difference in that over a 30-year term is $500,000. So you're actually paying $500,000 more because of the interest rate that you get locked into on your mortgage. Now, of course, there are refinance opportunities down the road or whatever. But at the end of the day, that's what the numbers look like. So it's a huge difference. When the Fed raises rates, when they raise at 75 basis points, and then another 75 basis points, some people are saying they're actually going to raise 75 basis points again, or maybe more. Maybe they go to 100 basis points in December. If that happens, we can once again in this country start to look at interest rates on home mortgages in the double digits. And then this is, don't think we're out of the woods on 10, 12%, because we're not. If the Fed, I mean, we've been there before, we can be there again. And when that happens, it puts pressure across the board. Mitigation, I don't know. I guess go buy Bank of America stock and Chase Bank stock and Wells Fargo. And then maybe you can get some mitigation that way. But
and hope for the best.
Yeah, I think though you were touching on it, Anthony was touching on it too. Most people would think, well, maybe rental, but then look at the rental markets. The rental markets are going up because the landlords are having pressure there. So we're all around in this fundamental, highly pressurized environment around real estate, commercial and residential, multifamily. I don't care where you go in real estate right now, the pressure's on. As far as mitigating, I think it's very personalized to the individual, what they actually need versus what they might want.
Great answer. Great answer. Think big picture. Anthony, many of these sellers would presumably be taking out new mortgages when they sell their old home. And most Americans who secured a mortgage did so when rates were lower than 6%. So listing their property now could mean increasing their financing costs on a new property. Thus, listing it for rental, to Paul's point and to yours earlier, is an obvious choice. What type of deal and listing should current renters be looking out for when in search for this great deal, if one actually even still exists? And are landlords considering long-term rentals more significantly? Do you lock in a 1-year lease or a 2-year lease, or do you do short-term? What do you say?
If I were a tenant right now, I'd lock in a long-term lease because rents are going to only continue to go up. There's limited inventory on the rental side as well. And so for even some of those homeowners opting for not selling because they'd have to buy into a more expensive rate, let's not forget, if it's owner occupied, they get the $250,000 tax deduction, or $500,000 if they're married. So they can go into buying another property with at least $500,000. So their mortgage would probably be less depending on what their acquisition price is. So those are things that people are now factoring in when they're doing the numbers. And also remember, you're marrying the house, you're not marrying the rate. And much to his point, people refinance. We're going into a new election for a new president. And so usually the rates tend to start dropping down. And so there's opportunities within the next 2 to 3 years where you can at least be in a reasonable striking interest rate range.
I love it. Very, very good advice. Paul, we have about 3 minutes, but the question is, should I buy now or wait longer? So it's conceivable that buying sooner rather than later could save money on interest rates, but it's tough to see how a buyer, especially a first-time home buyer, wins in this market. What do you recommend? What's the bottom line?
Well, I think there are a lot of people out there that believe you can actually lose something you don't actually have, and you can't. So the reality is, if you need a house right now and you're in the market, it's probably a good time to do it right now, because it's only going to go north for the short term if you need a home, and if you're in the process. And so that would be my recommendation. On the other hand, there are a lot of creative things going on out there, Zen, right now. You're seeing people renting. If you're in the right market, I was just down in Florida. It was amazing. The people that they move out of their house 10 days a month and rent it Airbnb. So that funds their mortgage plus, and they have no worries. And so people are creative like crazy these days. So it's also interesting to look at alternatives from a financial perspective on things that may be available.
I love that you said that. That was a great segue, and you did that in the perfect amount of time because I can squeeze in one more question for Anthony. So, Anthony, myelisting.com found that renters in South Dakota, Alabama, and New Jersey have the most trouble making their monthly payments. Renters in Miami, Houston, and Philadelphia are most behind on rent. Americans ages 40 to 54 have the greatest difficulty keeping up with their rent payments. So, this is troubling. What are your thoughts, and are there any great apartment rental shares one can find in the NYC metro area, and where do they start? You have about a minute.
There's always a lot of great rental apartment shares. There's many platforms that offer that, like roommate.com and so forth. And much to what he mentioned, a lot of people are Airbnb, and it is legal if you actually live in the unit. But there are states now offering you money to move there and job opportunities. So you can take a look at that. I know Street Easy and a couple of the other Redfin actually has a list of about, I think, 20 states that are offering incentives for people to move there and job opportunities. So you might want to go in an area where there's better employment.
Very well said. All right. Well, that's great. Guys, listen, we are out of time, but I just want to thank both of you for coming on. Short, sweet, fun segment, very insightful. Paul, you're always so full of knowledge and great advice. And Anthony, it was such a pleasure chatting with you.
Likewise.
Thank you.
Thank you.
Guys, we're going to see mortgage rates fall. How many months, how many years? We don't know. I don't think anybody knows. I don't think the Fed knows. There's just tremendous uncertainty in the market right now. But we will see rates come back down because we have to see overall inflation and interest rates come down. And the US cannot afford protracted high overall interest rates. So the Fed really has no choice but to stalwart in its stance of controlling inflation. That was our innovation and tech segment brought to us by Caldwell Soames. Definitely check out Anthony Lolli on the gram at Anthony Lolli, entrepreneur, co-author, best-selling author, the heart of the deal. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. Definitely check out ogpay.com. You'll get to see my face. We'll be right back after this.
A Moment of Zen is brought to you by Caldwell Soames Incorporated, investing globally in transformative businesses like Original Digital Corporation, or ODC. ODC develops advanced consumer and commercial fintech solutions such as OGPay, which will transform the way you manage your money. From sending and receiving money globally for free, paying for goods and services in person and online, pay bills, buy and sell digital currencies, all while earning interest. OGPay is easy to set up, FDIC insured, and your information is secured. Check out ogpay.com.